Welcome to The Alternative Investor. Along with the rest of the world, South Africans have shown an appetite for cryptocurrencies. They've looked at them as possible investment opportunities. But at the same time, SARS has been very interested in what is happening in that crypto space. And it also brings the question for investors and potential investors about the tax consequences of cryptocurrencies. To talk to us more about it, we're joined by Mansoor Parker, who is the executive for tax at ENSafrica. Mansoor, thank you so much for your time. Let's look at the tax debate around cryptocurrencies in South Africa. How have you seen it evolve over the years?
Yeah, I've seen it gather a lot of pace in the past few years. It was something that began 10 years ago, where we were only looking at Bitcoin to have grown the way it has really drawn the attention of not only tax collectors such as SARS, but also regulators such as the SA Reserve Bank. What I have seen of late is a much more nuanced use of language. For instance, initially SARS used to refer to it as cryptocurrency, they now refer to it as crypto assets, because crypto assets is a broader term which encompasses different types of tokens, payment tokens, security tokens, utility tokens as well. And they regard the virtual currency as part of the payment token, where we locate the Bitcoin and the Ethereum. SARS has joined an intergovernmental fintech working group with National Treasury and other bodies in order to get commonality around the language and the various positions which they need to adopt in relation to crypto assets. Because not only the tax issue, there's also issues of payment systems, of various matters regulated by other regulators. So what we've seen is a lot of effort to get some coordination going. What we haven't seen, though, is a lot of detailed guidance from SARS. They've issued a very brief media statement in 2018 in which they pointed out that virtual currency, crypto assets, it's a taxable commodity to be taxed in terms of the Income Tax Act, that it's always been taxable in terms of the Income Tax Act. That is not something that became taxable later on, but from the very first point that one began investing or trading in them, they were taxable. What they still need to do, in my view, is to issue detailed guidance specific to crypto assets. I don't think it helps investors too much to say that this is catered for in the Income Tax Act. It's such a daunting piece of legislation, and it's very difficult to find which sections do apply. So what I think is needed is some more detailed guidance. I'm not surprised that they haven't issued it as yet. I think what they might be doing is waiting for the discussions of the Intergovernmental Fintech Working Group to resolve itself before they issue more detailed guidance, simply because it's been such a rapidly evolving area.
Yeah. I heard you talk about the Income Tax Act, and I'm hoping rather briefly you can explain the consequences of crypto assets being taxed under the Income Tax Act and capital gains.
Yeah, absolutely. I think the first thing for investors to bear in mind is, what are the so-called taxable events? What are the events that will lead to taxation? Because once they know what those events are, then they can prepare properly for them, and they can anticipate them. The first event is the creation of the crypto asset, and the second one is the disposal of the crypto asset. Now, in the SARS note of 2018, they refer to the creation of the crypto asset, and they only refer to mining. But there are other ways in which crypto assets can be created. There are airdrops and initial token offerings, there's forging. Mining seems to be the most popular, but it's not the only one in which it is created. Now, in that note, SARS said that they regard the creation of the crypto asset through mining to be a taxable event, that one must pay tax on the value of the crypto asset that you have mined. And that obviously is a concern for people who have been engaged in mining activities. What they also said, unsurprisingly, is that when you dispose of the crypto asset, that is also a taxable event, either for income tax and for capital gains tax purposes. And at this point, I can come on to the question that you raised, on which spectrum does it fall? Because you have these two regimes, they're very closely related, but with very different tax rates. Persons who are taxed according to the income tax rates can pay tax up to a maximum of 45% per taxpayer. Those who dispose of assets, and those asset sales are treated as capital gains tax events, pay tax up to a maximum of 18%. So it's a vast difference. So from an individual point of view, you'd much rather want to be on the capital gains tax side, than on the income tax side. And this is where I think a lot of the disputes will arise between taxpayers and SARS. We've often seen this for people who hold shares for long-term purposes versus those who trade shares on a frequent basis. The traders are often in an income tax spot. The investors or long-term holders are often in the capital gains tax spot. And they usually have their methodologies by which they acquire the shares to indicate why they should be in the one box or the other. But those sorts of arguments haven't yet been fully developed in the crypto asset space, because unlike other assets like a property which generates rental income or a share which generates dividend income, the crypto asset mainly doesn't generate any income. It could, but largely doesn't. So my concern there is that SARS could say that because of the speculative nature of the asset, and this is in fact a statement which they made in one of their guides, because of the speculative nature of the asset and the fluctuating price movements, that this should be regarded as a revenue asset and therefore taxed on the 45% scale, which means that taxpayers should have an argument, a counter-argument to say, we are treating this as a capital asset and it should therefore be taxed at the lower 18% scale. I think that's where the major battlefield will be between taxpayer and revenue authority in future.
Yeah. Mansoor, I definitely want to have you back on the show because there's so many other things as well that I want to talk about. Wash sale transactions, which I'm hoping at that particular time we'll be able to break down as well. And we'll also look at what happens when you donate cryptocurrency. How does the Income Tax Act deal with you in that particular regard? And various other issues that investors and potential investors in cryptocurrency could be thinking about. However, thank you so much for your time. We'll definitely see you next time. That is Mansoor Parker, who is the executive for Africa, the executive for tax at ENSafrica, talking to us about the tax consequences of holding cryptocurrency assets. We're going to take a break and then we'll have more news with my colleague, Nompumelelo Siziba. However, before we get to that, I'm going to leave you with my other colleague who has your weather details, that is Mpho Rasimbi.